Welcome back to the Deal Vault podcast. If you're a real estate investor looking to scale, secure funding, and learn from real deals, you're in the right place. I'm Greg, and together with Nate and Sarah, we'll sit down each week and break down market trends, funding strategies, real deal stories from our investors. Now, if you're ready to unlock knowledge, relationships, and capital you need, let's open the vault. Hey, welcome back to the Deal Vault podcast. Today, we have a very special giant guest. This is Dylan, otherwise known as Dylan. Reference to the ever favorite Chappelle show, which doesn't get referenced enough here on the Deal Vault podcast. We'll see if we can squeeze in more.
We'll bring in some more for sure. Thanks for having me on the podcast.
Yeah, super pumped to have you. I think it would be totally appropriate. Just to give a little background on yourself, I'll kind of tee it up a little bit. Dylan's a young guy in the industry, came in and is crushing it. So
thank you.
You're welcome. You earned that. So tell us about yourself, what you got going on, why you like real estate. I presume that you do. I mean, maybe it won't be news to me, but
was in college. Met my now wife. We've been married for just over 3 years.
She's great.
She's the best. Decided that college wasn't for me. Decided that a little bit late. I was about 3 years in. So a lot of money in and a lot of time invested in that. Decided I didn't really want to do my major. I was doing hospitality management. So obviously the next step was drop out. That's a lot easier than you'd think. You actually don't have to do anything. You just stop showing up and don't sign up for classes. So that was very easy. The next step was get a job, right? Got to make some money to pay for a wedding that was coming up. So I went into car sales at Reliable Toyota here in Springfield.
It's a good shop.
It was a great place. It taught very good sales skills. I like to think I wasn't your typical sleazy salesman, as a lot of people think of him. I did very well over there for a year, and then through our church, my wife knew you guys and was babysitting for you guys on your small group nights. And then you mentioned, hey, he's in sales. Does he want to work in mortgages? And I was like, absolutely not. I don't even know what that is. What is this place?
What is a loan?
What is a loan? I hadn't even, gotten my own home loan. I hadn't done anything in loans. But then I was like, I'll talk to Greg. I'll give him a phone call, see what it's all about. And then you sold me for sure on just what this place was and what it could be. And I'd say everything you said was true and then some. I think even in the last 3.5 years since I've been here, we've reached points that I don't think you on the phone thought we would get to at that point. But yeah, now I've been here 3.5 years. You guys, for some reason, made me a VP of production and gave me a team of guys. And it's been awesome. Yeah, real estate, it's really opened my eyes to what real estate can be and how it can give you so much financial freedom if you do it right. So
good stuff. I think I've told you that I almost pulled a gun on your wife? Did I tell you that?
Oh, yeah, I've heard this story.
That was cool. For those audience that don't know, welcome to the Midwest.
We all carry.
Kinsey, we all carry. Kinsey had asked Sarah if she could take pictures at our house. We have beautiful back pasture land that's are amazing and beautiful. People should be taking pictures there. You'd have to contend with the cows at this point, but I see a car parked out front, nobody there. We've got like outbuildings with like a mower, like it's a thing. People were right off the highway. Like wouldn't be totally unreasonable for somebody to come and like, hey, free stuff. Expensive, stuff. So I look around, can't find this person. I'm like, well, I got to go find this, like somebody's on our property. I got to go find this person. I don't know who they are. I want to be prepared to meet whoever I want to meet. So,
sorry, I didn't tell you.
The time has come. I've got my AR. Let's go do this thing. And luckily, I look out back and see
it's just sweet little
Kinsey taking pictures with some young couple. And I put the rifle away and
that's good.
Waved. I don't think they saw me, but
that's good.
That was
good times.
Experience. Yeah, so good stuff. Real estate's fun.
Yeah.
Good transition there. I think what we decided we were going to talk about today is some of the things that we hear on the phone that borrowers are bringing to the table this is how it should go, but maybe that doesn't align with reality, at least on planet Earth. Maybe somewhere else in the universe, but not here. I think I know where a lot of this comes from. The old Google, the old forum where you've got, a guy that this is how I did it back in the 80s. And
Yeah.
so that must yet still be true, even though we've had major financial crisis with a lot of real estate legislation come out, et cetera, a lot of banking reform, a lot of financial reform. Maybe that stuff doesn't hold true today. So I think what we can do is maybe provide some value of stuff that you hear on the phone with borrowers.
Absolutely.
I'm guessing pretty regularly
Yeah.
that they're bringing to the table that may be a distraction or something that they're focusing on to get a better loan, to get a better deal, to lock down the next best piece of real estate in their life that is potentially a waste of time or holding them back.
Yeah, absolutely. I would say the biggest one that I hear, and I think I hear across the shop, from my guys too, is cash on hand, right? I think there's a lot of stuff that goes out there because it does get a lot of views and a lot of clicks, and is
Yeah.
how to get into real estate with no cash.
Yeah.
That's actually going to be the title of this podcast.
And we're going to show you how.
No money, buy millions in real estate today, right?
Yeah,
That's what we're doing.
exactly. Yeah, no, it's just something that I think a lot of people, that's what everybody wants, is how do I get something without having to give anything? And I
Yeah.
think that instantly goes against like investing. You're putting something in to get something out. And with that, with real estate, you do have to have some cash on hand. Now we have products that can get you in with very little down. We even have some flexible products that, if you have people that you want to work with and partner on things, like maybe you're the mastermind and you've got a buddy who's like, man, I've got a little bit of cash. Let's partner together on this
Yeah.
stuff. Let's build a real estate portfolio together.
Yeah.
Like those are things you can do, but you do have to have something, at least to start, right? We do have a couple 100% financing products once you get a lot of experience,
But they still want to see
but
liquidity.
they still want to see liquidity for reserve so you can start the rehab, different things like
Yeah.
that. So that's
Yeah.
been the biggest thing that we hear.
So what do you usually talk, when that comes up, what do you usually tell your borrowers in those circumstances? Or like, are you seeing this as like mostly new investors, like first time investors? Like
It's
what
Yeah.
are some common threads that you're seeing?
typically with new investors. I
Yeah.
think they see things or they hear things from people of how, like Greg said, how they did it back in the day.
Mhm.
There were some different products, and I'm not saying there's no products out there that are going to do 100% financing and cover all the closing costs for
Yeah.
a zero. Like they're just like, good luck finding them. If you find them, let us know.
There may be
They're
some
just
local guy
people,
that, realistically isn't
deep
like
pockets,
following like
guidelines,
realistic,
his own cash.
prudent loan underwriting.
Mhm.
Like lenders underwrite risk, and your local guy on the street can do that stuff, but he's also purposefully or not purposely omitting certain risk underwriting procedures.
Yeah,
But he answers only to himself, and that's his prerogative. So if you can find that local guy or gal that's got crazy deep pockets and will do everything for you, that's pretty sweet.
yeah,
But
great. Take that all day.
probably not the most reliable executable thing.
Yeah, well, and they're just not, they're not everywhere, right?
Yeah.
But I would say, yeah, mostly with new investors, what I try to do in those situations, it just is give a little education. Hey, let's take a look at this deal. What you have here. Maybe they're looking at a very large transaction in like Florida
Yeah.
or California, and I'm like, hey, you don't have much cash. Maybe look into some different markets.
Yeah.
Midwest has some great markets where you can get to properties for a lot less. So we'll go over, like, for this specific type of transaction, you're buying a property for $150,000. You're putting $30,000 to $40,000 in rehab. Here's what your down payment's going to look like with your credit. Here's what your, closing costs are going to look like. Insurance and title, reserves. Here's an estimated number where you need to be. How you get there, there's a couple different solutions. If you want to partner, if you want to save, win the lottery, whatever that might be, right?
Yeah.
Win the lottery,
Winning
the
the
best one, right?
Yeah.
Best odds. Yeah.
Made to do that.
But yeah, I think that's the biggest thing here. And I kind of mentioned another thing that's another really big one that you had mentioned before we started this was Fico score.
Yeah.
Credit score.
So, okay, well, let me tee this up for you.
Mhm.
Dylan, we do asset-based loans, so it only matters everything about the asset, right?
Of course.
What does my FICO matter if it's an asset-based loan? So why is that wrong? Like, what's really going on?
Yeah. Well, I mean, you still have to look at it. What I always say to my borrowers when they get upset about something like that, where it's like, why do you need to look at my credit score? If you were going to lend money to somebody, would you not want to see what their borrowing history looks like?
Yeah,
I mean, it's a no-brainer. At the end of
for
the day, if
sure.
you really think about it, of course you have to show a credit score. Like, why would you not have to show a credit score is my question.
So it's a business purpose though. So I mean, like it's not that it's totally off base to have some
Yeah.
semblance of like, hey, this is an asset-based loan made to a business.
Mhm.
And it's backed by the piece of real estate. It's an asset-based loan. But
Mhm.
at the end of the day, if you drop the rent check on the floor of the property
Mhm.
has no ability to take that check to the bank and go pay.
And pay back.
Who does that?
Mhm. Yeah, the borrower.
The borrower, the real estate investor takes the check,
Mhm.
goes to the bank. I mean, it's all digital nowadays, but
Yeah.
they take it to the bank, it shows up in their bank account, and then probably on auto draft, but it's from their account that they're managing,
Yeah.
that loan payment gets made. It's not the piece of real estate that is the asset that does all this stuff. There's a human being behind it that actually does the thing,
Yeah.
which is make sure that loan gets paid. And the loan is the thing that makes the whole world go round. Like it helps you
Yeah.
buy the real estate. It's what you want. But so the FICO does matter. The higher the FICO,
Better
like
your interest rate, better your terms, higher
great.
leverage. I mean, I think that's what people don't think about too is, let's say we did use products and they were more readily available that didn't use credit score.
We have it.
And those terms would be
Ugly.
way more egregious. You know, we have terms that compete with conventional.
Right.
That's because we can do, we have that's a small piece of what we do is your credit. That's the
Yeah.
nice part. It's a small piece.
Sure.
We're not looking at DTI, we're not looking at tax
Right.
returns, but this little small piece helps you get terms that are way more competitive.
For sure. One of the things too that I know has come up more over the last couple of years is not just the score, but just trade line history on credit.
Mhm.
I don't know if you can talk through some specifics, like where you've interacted with the borrower that maybe they've had the score, but they only have like one trade line or they don't have a lot of mortgage history. I don't know. What does that kind of look like? Because that there is a little bit of evaluation in that. It's not nearly what you would see in the conventional world, right? We're not looking at the DTI, but they do want to see some history. I don't know if you want to talk
Mhm.
through that kind of situation.
Yeah.
Comes up.
Those can be tougher, if it's someone who, uh, has just opened a card a year or 2 ago, and that's the
Yeah.
only thing they have, right?
Sure.
Then it kinda comes down to, like, what we can help with is we have a lot of different lending sources that we can use, and trying to find a source that can use with just one trade line, which we have some options that
Yeah.
will only look at the score and that's it, you know, no more questions asked.
Yeah.
Um, but I mean, that conversation is essentially just, how do we help build up your credit, right?
For
How do we open more trade lines? Again, in this industry, if people are going to lend to you, even though it is asset-based lending, a piece of it is still credit. They still wanna see that you have history for it. They
Yeah.
they still
That's
wanna see that you know how to pay things back,
Right.
essentially.
That's right.
So you gotta have cash. You gotta have a decent credit score, and it's gonna only help support better terms, better
Mhm.
leverage. What are some of the other big things that come up?
So Dylan, what if hey, my credit's, don't worry about it. It's a business purpose loan. I've got business credit. You can use that, Dylan. Use that, Dylan. What,
Yeah.
like, you can do that, right?
No. Yeah, I wish, that's just not something that, to be honest, I don't know a ton on that. You would probably know more, but I know it's something we don't
It-
use and it's
It's
not
not even,
utilized
Yeah.
ever. Even for most of our borrowers, not most of them, but a lot of our borrowers, I have a really good set of guys that do a lot of loans with us. They open a new LLC every single time.
it's fun.
Yeah.
Which is great. We love that. Like that's easy, protects them. That's what they want to do.
Mm.
Obviously that wouldn't ever build any business credit if there was any to be built for them there.
But they have figured out that that doesn't matter.
Yeah,
Right.
exactly.
Use your entities for working with your CPA, like whatever they've
Mhm.
got planned for you,
Liability mitigation.
liability, et cetera, et cetera.
Mhm.
That's what really matters out of that. The business credit for whoever's listening to this, it doesn't matter.
Yeah.
Now, if you want to go to one of the big banks and get like a business credit card, I think that's where some of that comes in.
Mhm.
But I sure believe you can have your very first LLC and open up a business credit card tomorrow.
Yeah.
Ta-da! And that like you don't have this history of credit. I just see so many places online, and I know that it comes up on phone calls, maybe a little less nowadays, but it was I'm I'm working on my business credit. I just opened my entity, so I'll be able to get loans in the future. It's like, no, 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 no. If you've got a FICO score, personal FICO score, and you got some cash, we can talk about like how much it's specific to your
Mhm.
deal, but like
Yeah.
a little bit of money and you've got a personal FICO, go now. Like if
Yeah.
you've got a deal, don't wait. You don't have to, you know, become this enterprise, blah, blah, blah.
Mhm.
Nope. If you got just enough money and you've got the FICO score to your name, you can transact, you can buy real estate today, right now. Let's rock and roll.
Yeah. Well, and something that real quick that
Yeah.
we like offer that a lot of our borrowers absolutely love, and it's not with every single product, so it's something you
Mhm.
have to bring up specifically to us, but we have options that can do just soft pulls.
Yeah.
And so then a lot of times that pushback on, well, I don't want to use my credit, it's going to make it lower when I
Mhm.
go buy my own house or buy my own car, whatever that might be. I don't want my score to keep getting hit, especially for real estate investors who are buying, 4, 5, 6, 7, 8 properties a year.
Yeah.
That could be a lot of hits potentially. But if we have options and there are options out there that can do just a soft pull throughout the whole
Mm.
process. It's not counted as an inquiry, doesn't lower your score. That stuff can be really pivotal for anybody who's worried about
Yeah.
that.
Well, and I think the other thing too that has shifted a lot is if you have two business partners on an LLC, when, we first started kind of pre 2020 and 2018, it would look at, the lower of the two scores between the partners. So if
Yeah.
both people were having their credit and background pulled, they would price the loan off of the lower of the two. But we've really seen it shift over the last 4 or 5 years to where most of our capital providers are going off of the higher of the mid score. So both
Yeah.
people can have credit. Obviously, there's usually like a base level minimum, like both people have to have, over 600 or something like that. But that's been really helpful to support better pricing is if a husband and wife are both going to be guarantors, they're 50-50 owners, that if the, husband has higher credit, that you can use that score and it doesn't kind of totally remove that other individual. But you can kind of, again, in LLC situations, kind of leverage your business partner's credit if you're both working together. Obviously, both wanting to guarantee, you're not going to be hurt like you were before, where if you're the lower guy, oh man, we're going to go off of your score. So I think the industry as a whole has changed a lot with that.
Mhm.
So there are some benefits like globally and the soft pull thing as well that have really changed over the last 4 or 5 years to really be pro investor and support better pricing options. So yeah, I think that has helped a ton in the last couple of years. So
Yeah,
yeah.
absolutely.
What else? What else are people bringing to the table that they think is how it's done that, hey, it just doesn't work that way?
Man.
What about appraisals?
Oh, yeah.
I think there's a lot.
Good one.
So not to care of a whole episode on appraisals and how they
Yeah.
work. That will be really like
Those can be a
good.
big pain point.
But what are a couple things? Just a couple, because this is a whole episode's worth.
So biggest thing is people want to pick their own appraiser. Can I order my own appraisal? Can I pick my appraiser?
Which is great because you can totally do that, right?
Back in the day. Yeah. Back in the day, absolutely you could.
Before to that.
Yeah.
About the financial crisis.
Watch a little movie, The Big Short.
Yeah.
No, we have to use AMCs. There have been products here and there where you could pick an AMC, or you could pick your appraiser on a specific list. Those days are really all gone, especially with the
Mm.
stuff that happened in Baltimore, and I think it was Philly had
Yeah.
some problems. Really, every lender is like, use an AMC. Here's our approved list of AMCs. For those who don't know, AMC is appraisal management company. So what they're doing is it's a third party. So lender, appraisal management company, and appraiser. We order it through the AMC. They have a list of appraisers in that market that then can accept the order, and that way they're the ones who are choosing. It's a third party, unbiased. And they have a panel of approved appraisers they have, and so you don't just get to pick anybody. Yeah, you cannot pick your own appraiser.
No.
Obviously, that would make things way easier, but very clearly biased for
My
many
property
reasons.
is worth $1
$1
billion.
dollars, yeah. So you can't do that. I would say another big one is comps. Sarah, you can probably speak on this a lot.
Yeah. I mean, I would say a lot of times, especially with fix and flip products, we typically ask for comps from the investor up front, that we can send over when they do the desktop valuation and kind of have their team look at the value of the property. When it comes to like long-term rentals, kind of stabilized properties, they're only going to look on recent sales. They're not going to look at listings. It has to be, again, I think the parameters are, you have to look at the actual comps on the report. It has to be closer. It has to be sold more recently. Like it has to be a similar like value. Like you really want to spend the time because you only get one dispute if you are going to dispute the appraisal, to make sure that you're putting your best step forward, which there are a ton of tools out. We use them in house that we can support with. There's a lot of just AI comparable tools out there nowadays that honestly some of our lenders are using to review appraisals to make sure that they actually qualify with decent comparables. So there's a lot more than there used to be to support the borrower level with looking at comps, but the comps have to be actual sales. They have to
If it's listed, that is not a comp.
typically it's not a comp.
Could it be an indicator? Sure. So
Sure.
we all know
Yeah.
that deal that's listed way above market, and
Yeah.
that's maybe just their marketing strategy. It is not a comp.
For sure.
It's
Yeah.
It's a whole
information.
Yeah.
comp. Maybe if you wait long enough, but not
I
yet.
think too, to kind of go back to the AMC a bit there is for people that are working maybe more locally, they work with like a credit union or a bank. I mean, sometimes those kind of local lenders are using local appraisers. They don't typically use AMCs. I would say a lot of them are probably transitioning to that. But when we're talking about like national mortgage companies and most bigger offices, like they're using AMCs because the loans are getting securitized, they're being sold, and it creates a separation from the lender and the appraiser. So when we order through an AMC, like we don't know any of the details on who the appraiser is until the report shows up. So the only time we've had issues are if, sometimes the borrower like get a phone call from an appraiser they've worked with and maybe they've had like a negative interaction, which some AMCs will allow us to be like, hey, it's not a value issue. This appraiser literally was just kind of a mean guy or wasn't prompt with delivering the report or down. Delivering the report. So sometimes we can go back to the AMC and provide that feedback. Or obviously, if we have a situation where the appraiser isn't delivering, we will use the AMC to advocate. They are kind of that middle person, but we don't know who the appraiser is. We don't know, we're not able to reach out to them directly. And that would go for us as a mortgage broker or our lending partners. Like they're ordering with the same AMCs. They don't know those things either. And it reduces the connection points of just some of the big issues that came up back in 2007, 2008 appraisals.
Some of the big stuff that I see pretty regularly on these is, well, I want to use this comp. Like I believe that this is good, but there's a comp that is closer in proximity to your property, the subject property, and or it was sold more recently than the other comp. Now, you can still use the other one, but a lot of times we'll have borrowers come in and say, yeah, but I want to use this comp, and having to skip over like 3 comps that are more recent and closer, or will cross a major thoroughfare, which is kind of the cool word of like this major road that goes down the street. We all know like every town has that where, hey, on this side of the road, it's like really nice. And this side of the road, we'll just say it's less nice.
Drops off.
And that's fine, like more value play. But that can be a significant thing. You know, below grade square footage typically has less value than above grade. Well, but not for my property. Like take a dose of reality, because an appraisal, although somewhat subjective, is in many ways very, very objective. And in most circumstances, people that are coming in saying X, Y, and Z on their appraisal, they're leaning more heavily into the subjective and purposely disregarding the objective things that are on there. Now, do things go wrong in those? Sure, all the time. But Just because something's listed doesn't mean it is going to be a comp. If it's not
Mhm.
sold, it will not be a
Will
comp,
not
as a
be.
matter of fact.
Yeah.
And that your 4 unit will not be comped against the 1 unit down the street that just sold. As much as that would be nice, they're just not the same thing.
Yeah. Another big piece of advice, if you have a good realtor or that's on your team, someone who has access to the MLS to check that stuff out is going to be
Yeah.
really big. Rather than, Zillow has its perks, but not everything is on Zillow, and not every correct number. Those aren't always updated by the realtors when they
We're
put in
not
gold.
sponsored by Zillow, although please.
Yeah.
Bring that on.
Yeah.
But yeah, a good realtor can. I've seen a ton of my clients have great success for. Let me shoot these over to my realtor, see what kind of comps they can find.
Yeah.
They have the MLS. They do that regularly for their clients, and
Mhm.
they actually get good feedbacks on disputes.
It's good to have like a quality pro that you can rely on.
Quality-
In lending, in plumbing,
Yeah.
in sales comp,
Yeah.
like it just
Absolutely.
any of these things, like having that
Have a
trusted
team together.
partner
Mhm.
that like actually is going to give you a measured, reasonable opinion on X, Y, or Z
Yeah.
is invaluable. You can't undervalue that,
Mhm.
enough. So
Yeah.
awesome, really good stuff. I
Yeah.
think
I would say, Dylan, just kind of to wrap the thoughts today, I know we covered a lot of like pitfalls or common questions that borrowers have, but if you could kind of blanket statement, like a final takeaway to your borrowers that are listening or just a new borrower out there, like what's the final piece of advice that you would give them for success in real estate and loans?
I think the biggest thing is a team. Come talk to us. Go talk to your realtor. Go talk to the people in your community that are real estate investing.
Mm.
Getting good advice from people, like going at it alone is
Yeah.
really never the best take. We have great guys on our team that can help you vet deals, can help you look at comps, can help you look at, maybe you're overpaying for that a little bit. Here's the best loan product. If you go with this property over this property, we can get you different terms. Like, there's a lot of different people out there to help you. Go get the help. There's plenty of free help over here.
Yeah,
So
for sure.
reach out to people.
Awesome. That's great. Well, and again, if you're listening, we can help tell you how much money that you probably should have, where your credit's at today, and even some tools to help improve and support your credit. And if you have other questions about appraisals, we can cover that with you as well. So we're here to help. Thanks again for joining us, Dylan. We
for having
appreciate having you on the team.
Yeah.
And thanks, investors, for listening.
Thanks for listening to the Deal Vault. If you found value in today's episode, be sure to subscribe and share with another investor and leave us a review. If you're looking for help funding your next deal, you can always holler at us at loanbids.com. We'd love to help you on that deal. Until next time, keep building, keep investing.